Managing money is difficult and complicated, especially in this day and age. You need to have a sharp brain and some very wise financial decisions throughout your life to get a hold of it. History's most famous financial advisors are known for very different reasons. They include successful investors who share their knowledge with the masses, television celebrities who write books, and criminals who stole millions of dollars. However, they all had one thing in common: they know how to manage money. So in this video, we're going to discuss 10 of the most famous financial advisors who have been in the game since forever and actually know what they're doing. So let's dive in. The first one is Benjamin Graham. Benjamin Graham was an influential investor whose research in securities laid the groundwork for in-depth fundamental valuation used in stock analysis today by all market participants. His famous book, The Intelligent Investor, had gained recognition as the foundational work in value investing. Graham is known as the father of value investing, which involves identifying and buying undervalued stocks that have the potential to grow over time. To calculate a company's intrinsic value, his approach eschews trends and hot ideas and relies instead on diligent research through financial analysis and patience. Standard concepts today, but revolutionary when he introduced them in the 1930s. Graham's disciples include many of the most successful investors of the last 70 years. His 1949 book, The Intelligent Investor, remains a must-read for all asset managers and stock traders, whatever their investment approach. Warren Buffett. Investor Warren Buffett, the Oracle of Omaha, is one of Graham's most famous followers. Buffett has openly attributed his remarkable track record to Graham's principles. The one rule of Graham that Buffett does not always follow is to diversify. He often prefers to concentrate investments in companies. After providing significant profits to his original partners, Buffett went public with the acquisition of Berkshire Hathaway Inc., BRKA, in late 1964, making it the holding company for his other investments. The compound annual growth rate of Berkshire Hathaway from 1965 to 2021 is a staggering 20.1%, one of the best long-term performers. Warren follows his own advice. When he invests in a company, he likes to read all of its annual reports going back as far as he can. He looks at how the company's progressed and what its strategy is. He investigates thoroughly and acts deliberately and infrequently. Once he's purchased a company or shares in a company, he is loath to sell. His penchant for long-term investments is reflected in another of his aphorisms. You should invest in a business that even a fool can run, because someday a fool will. He doesn't believe in businesses that rely for their success on every employee being excellent. Nor does he believe that great people help all that much when the fundamentals of a business are bad. He says that when good management's brought into a fundamentally bad business, it's the reputation of the business that remains intact. Peter Lynch. In the early 1980s, a young portfolio manager named Peter Lynch was becoming one of the most famous investors in the world, and for a very understandable reason. When he took over the Fidelity Magellan Mutual Fund in May of 1977, his first job as a portfolio manager, the assets of the fund were $20 million. Between 1977 and 1990, he proceeded to turn it into the largest mutual fund in the world, outperforming the market by a mind-boggling 29% per year annualized. After leaving the fund, Lynch wrote 3 best-selling books detailing his investment philosophy and stressing that small investors are capable of doing better in the stock market than large asset managers. Peter Lynch firmly believed that individual investors had inherent advantage over large institutions because the large firms either wouldn't or couldn't invest in smaller cap companies that have yet to receive big attention from analysts or mutual funds. Dave Ramsey. Dave Ramsey is a radio and television personality who's written 6 best-selling books on The Dave Ramsey Show, a syndicated radio program. He takes calls from people with financial problems and talks them through the solutions. His underlying philosophy is debt-free living. He counsels people on concrete steps to get out of debt and never get into it again. Dave Ramsey's a guy who, through personal experience, was able to get out of debt and find financial peace of mind. He's now a financial expert with courses and books to help the everyday person get in control of their finances. Suze Orman, an Emmy Award-winning television host and best-selling author of multiple books. Suze Orman is known for her brash and pushy style that she delivers with a smile. Her appearances on The Oprah Winfrey Show and The Today Show, as well as a column in O Magazine, have made her one of the most famous and recognizable financial advisors of all time. Orman's New Age approach to money was exemplified in The Courage to Be Rich in 1999, in which she described money's energy force. Positive thoughts will attract money, while negative ones will repel it. The book was a bestseller, as were her later works, including The Laws of Money, The Lessons of Life in 2003, and The Money Book for the Young, Fabulous, and Broke in 2005, a book for 20-somethings to help them manage their burgeoning finances. Jim Cramer. Hedge fund manager turned TV host, Jim Cramer is known for his CNBC program Mad Money. The show's known for its brazen, loud, fast-paced style. Cramer also had his own website, TheStreet.com, which provides Wall Street-related news, commentary, and advice. In 2021, Cramer announced he would be leaving The Street. Over the course of his run on television, Cramer's also known for some historically bad stock picks. Cramer's success on Mad Money has allowed him to host and appear as a guest on multiple investment shows across various broadcasting companies. In addition, Cramer's been a guest on prominent shows unrelated to investment finances, such as Arrested Development, The Tonight Show, and The Daily Show. Robert Kiyosaki. The author of the best-selling Rich Dad, Poor Dad book series, Robert Kiyosaki also conducts personal finance and real estate seminars, franchised through his Rich Dad company. His basic philosophy: create passive streams of investment income and grow them until they can support you without you having to work. To date, Kiyosaki's bestseller has sold more than 32 million copies and has been translated into more than 40 languages. He has, virtually single-handedly, challenged and changed the way tens of millions around the world think about money. Ben Stein. The well-known actor and host of Comedy Central's Win Ben Stein's Money is a former economist and law professor. His Hollywood persona make him a sought-after guest on various financial news shows. His advice and opinions are straightforward and to the point. Ben Stein is the most famous economics teacher in America. He became a cult figure for his comedic role as the droning economics teacher in Ferris Bueller's Day Off. His part is by far the most widely viewed scene of teaching economics and has been ranked as one of the 50 most famous scenes in movie history. But in real life, Ben Stein is a powerful speaker on economics, politics, education, and history, and like his father, Herbert Stein, considered one of the great humorists on political economy. Charles Ponzi. Charles Ponzi did not invent the pyramid scheme, but his version was so audacious that all subsequent scams of a similar nature bear his name as Ponzi schemes. In 1919 to 1920, under the heading of a firm called Securities Exchange Company, he promised returns of 50% in 45 days or 100% in 90 days. Due to his reputation for success in the arbitrage of post-stamp coupons, investors were immediately attracted. Instead of actually investing the money, Ponzi just redistributed it and told the investors they made a profit, while pocketing a significant portion of the proceeds for himself. As long as new investors deposited funds into Ponzi's plan, there would always be sufficient cash flow to return the capital and profits to the investors that preceded them. Bernie Madoff. Bernie Madoff was perhaps Charles Ponzi's most infamous disciple. Madoff previously ran a legitimate securities firm and was chair of the NASDAQ for 3 years in the 90s. He used this operation as a front for the creation of a hedge fund division that, while pretending to use sophisticated trading strategies, was a total fiction. He simply deposited new funds into a single bank account that he used to pay existing clients who wanted to cash out. Still, the returns and his reputation seemed so good that thousands of wealthy and famous people and even other hedge funds invested with him. It was only when the 2008 financial crisis caused Madoff to be unable to keep up with redemptions that his operation was exposed as a $65 billion Ponzi scheme. Madoff died in prison on April 14, 2021. Thanks for watching, and we'll see you next time.